We are back for another podcast pre-2022 Equity Crowdfunding Week session here on Discover the Future. Today we are talking about the cloud-based securities and the solutions that are changing the world. And we have the one and only CEO, Rick Bentley of Cloudastructure. And then we have Vin. Vin, I always say your name wrong, so give us your introduction and tell people how to say your name.
That's all right. I'm Vin Narayanan. I'm the Vice President of Strategy for KingsCrowd. And yeah, we love startups. Let's dig in.
Yeah. So it's really cool stuff, man. And I'm
Looking forward.
excited to have this conversation for one, two, because we have the conference coming up. Rick, you and your team have been heavily involved in the conference and putting it together. Some exciting things coming up. So can't wait to get to that. But how you guys doing today? Like, where are you guys at, Rick? I see this beautiful, a whole bunch of livelihood back there. Tell us what's going on. And where's our little friends? Our little friends, they're not walking by anymore?
Yeah, I got some cats around. So I had the younger, hotter fiance who became my sugar mama. She was at a company that went public, and she hadn't been to Hawaii before, and I took her like 5 years ago. And suddenly she had the big IPO cash out. She's like, I want to buy a house in Hawaii. And I said, baby, I love you.
Yeah.
You're there with what appears to be multiple cats, not just one.
Yeah, so, upside downside, right? She also had never had a cat before until she met my cat. That cat has since passed. And since then, I think we're up to 11 cats right now. We just had 4 kittens, so
Man,
7 became
a full
11.
house. And
Yeah.
Are you hanging on to the
That's a little bit of a
kittens,
problem.
or are you giving them away?
Are you asking me or
I'm
are you asking her?
Man, funny.
I thought it'd make a lot of sense to keep one maybe and give the rest away, but I think she's already in love with all 4, and so we got 11 cats now.
You gotta stick with it. Well, good, man.
You got to take good with the bad, man.
Good. Well, listen, so a lot going on, a lot of cool things, a lot of great information to know about Cloudastructure. So, I kind of want to just dive right in, right? So, tell us a little bit about Cloudastructure. Tell us a little bit about the history and what people should know about, what you guys are doing.
Sure. Well, a long time ago, back not long after the .com boom, I was doing a startup that was backed by SoftBank. And we had offices south of Market in San Francisco with the hardwood floors and the tall ceilings, kind of the converted loft space, right? And we had access control. We had a guard at the front desk. We had an alarm, and then we had cameras in the building. But that didn't keep someone, dressed like any of us, from walking in around noon and picking up someone's notebook computer and walking out, right? So we knew the landlord had cameras up, so we went and asked him what's going on. And he came back and said, someone had unplugged the recorder to plug in the vacuum cleaner. And so there's no recordings, right? I'm like, well, that's kind of goofy, right? Here's this mission critical system in the building and it's not monitored and everything's on premises. Why'd you buy such a crappy system? He's like, man, I am running Class A property in the hottest real estate market of our lives, in the hottest, most expensive place on the planet. I'm the definition of price insensitive. I just bought the most expensive one. I'm like, okay, well, note to self, this industry needs a hand at some point, right? Yeah, so the whole idea of Cloudastructure is we take that video, we push it to the cloud. Building burns up, blows up, burns down, the recordings are in the cloud. And then we found after it's in the cloud that we had a really unique advantage when it comes to computer vision, because we had access to the really big, expensive computational clusters to do the computer vision, to identify all the objects in the video, to recognize all the faces, to grab all the license plate numbers, right? If you're doing it on the camera, you got this teeny little chip, right? That's really expensive on a per camera basis. If you're got an NVR, you got some Windows machine out there that's just, not that hot of a box, right? But if you've got it all in the cloud, man, we can get big GPUs fired up and crunching that data. And so we got a unique advantage when it comes to the computer vision.
Wow, man, that's great.
Yeah, so to me this is interesting because you've actually got 2 parts of the market covered. You actually have the cloud storage covered, and then you have the security expertise aspect of this covered as well, which makes you fairly unique in the marketplace because usually you get one or the other, but not both.
Right.
Yeah. And we're adding a third. And one thing we found that's really important to people is there's this AI can do a lot, right? So here's just a simple one. Hey, you got a 100 camera system. That's cool. Show me what happened in the last 24 hours. You're like, you mean look at all the video? Yeah, like tell me what's going on. Like we had a big incident going down. I want to know everything, right? So, well, that's 3 8-hour shifts to go through one camera for 24 hours, right? And then you've got 30 days, or sorry, then you've got just 24 hours, right? You got 100 cameras, so you've got 100 cameras times, you got 300 person days to get through that video, right? It's kind of crazy with just a 100 camera system. You had 100 cameras, you can't see anything, but because we can just say, hey, show me all the video with backpacks or this guy. Or cars, or people with dogs, or people without dogs, or dogs without people, or whatever you're looking for, right? And we can show you just the video on that, like instantly. And so that's great, but there's still this that's where the AI ends. So where does the human begin? And guards are an interesting feature of our society, right? They might be asleep at the desk, they might be doing something else, they can't be everywhere at once. But we set things up so that the remote guard only gets notified when something's going down on premises. So it could be, hey, if someone crosses the line into the lobby, that matters. When they're walking back on the street, that doesn't matter. So that's just one example of where the AI can make it so the human can actually watch it all. Because even if you had 100 guards in a remote center, they get bored, they tune out, right? But we can make it so, hey, if someone walks into the lobby between 10 p.m. and 5 a.m., that's when the remote guard comes on and watches from the human aspect, right? That's where AI meets real eye.
Do you do you do Internet of Things stuff. How does that work?
So we have a access control system as well. We haven't been promoting as much lately. We're moving from an old system to a new system on it right now. It comes back and says, hey, you've got these 300 devices. You probably knew about 100 of them, right? That people brought to your network. And one's the fish tank and one's the printer. And these 7, though, have a real vulnerable security exploit that you should know about, right? So that's the IoT side of things as well.
Wow. What's crazy is that not all technology is moving so fast this way, right? I used to have I had a Ring doorbell, right, where you set the line. If someone crosses it, then it alerts you, right? But then I felt like a leaf can fly by and it will activate, right? So, but with what your technology is, if that leaf flies by, I can basically type in leaf, and then all the leaves that flew by come up.
Yeah, if that's what you're looking for. But more importantly, we can say, having just motion from here to here, like I said, it could be a leaf, it could be a branch, it could be anything. Maybe you only want to know when a person crosses that line. It's a lot more useful, right? So we'll just alert you when a person does. And if there's a remote guard center in the middle, we can alert them, and they can check while you're sleeping, and they can wake you up if it's an issue.
I mean, with AI, you can cover large areas at scale. I mean, to me, that's like the interesting part, right? Is that you can take like a massive parking, like an airport parking lot or something like that, and you can deploy cameras, and and with the AI, you can set it up to check for things that, normally, check for signs that something weird is going on, and have the AI be able to recognize that stuff. And it sounds like if you've got that set up correctly, then you've got remote guards that you can send out there, but you're also reducing the need for sending people on foot patrol. You're also reducing maybe your personnel costs. There's a lot of ways in which this can be deployed to really change the way a business runs and the way a business is profitable.
Yeah, absolutely. Guards are deceptively expensive. Let's do some math. You want a guard on the front door. That means you need 2 guards on the front door because one has to be able to go to the bathroom, right, or have an issue or something. So that's 2 guards on 3 8-hour shifts per day, 7 days per week. So pretty quickly, like, oh, it's $250,000 a year to have someone watch that door, right? If you really want to do it 24/7, it becomes impractical really fast, right? Even for big companies like Apple and Google and these other ones who you think have unlimited money, you can't put humans everywhere. So the artificial intelligence meets the human intelligence, right? And that's where we come in. We try and get that gap as narrow as possible, but you still want humans in the loop, and you prefer them to be in a call center somewhere and not on premises, bored 99.99% of the time.
Yeah. Now, so I kind of want to dive into equity crowdfunding, right? That's why we're here. We're taking this huge leap forward into the future, right? That's why we named this Discover the Future, because there's so many things that in industries that are involved in equity crowdfunding now. Like, how, in your perspective, how has the crowdfunding experience been so far, and how has it elevated the brand?
Yeah, that's a great question. So, we sell to enterprises, right? So if we had a consumer play, I think equity crowdfunding would have more of a direct input for us, right? If we were selling consumer goods and we got a bunch of investors who believe in it, they'd also be the first customers, right? That's not to say that some of our investors aren't professionals at large corporations who are potential customers too. That's actually happened. We've gotten some, small, medium sales off of it. But what's been most interesting for us, or at least for me, with equity crowdfunding, is, as I mentioned, the last company I started was backed by SoftBank. And after a long fuse, it was bought by Uber, right? It was the Silicon Valley VC model that all entrepreneurs have chased probably at some point in their life, right? But that's a really binary outcome, the VC landscape. They're fashionistas, right? So if some company just made a big splash going public, they're looking to copy and paste that company real fast, right? And if you say, oh, I got this new deal, they're like, we're looking for this right now. You can have the best deal on the planet. If you're just not in fashion at that minute, you're just not going to pick it up, right? Whereas with crowdfunding, I think ironically, the ecosystem's more rational, right? Each retail investor is not trying to out-impress the other retail investors like VCs are, right? Hey, we got in on this deal. Now we got an Airbnb-like deal. Now we got a Facebook-like deal. Now we got a, whatever the big company that IPO this week is, right? FinTech, whatever. No one gets fired in the VC space for doing what everyone else is doing. So they just tend to do what everyone else is doing, right? And if it doesn't work out, they go, that's what everyone else is doing. And, sorry we didn't return capital this fund, right? And I think with equity crowdfunding, it's really is the power of the masses, right? It's the collective hive intelligence of the community. And it's like, no, I get that. That makes sense.
So you touched on a couple themes, which is, there's the copy and paste sense of business, and the crowd is a little more sensible and grounded. And so I just want you to maybe dive into a couple examples of, what you've run into where you've seen the crowd asking sort of interesting questions that you wouldn't get necessarily from the VC universe. And then the other thing is just to give, people out there an idea of what it's like to raise. I mean, how much time is required to put into crowdfunding raise, how you manage it, how you think about going about doing it, because the process of raising from a VC is very different than the process of going through equity crowdfunding.
Yeah, for sure. So I think the first thing that people don't realize with venture funding is it's good old American know who, right? It's not know how, it's know who. Who's going to introduce you to the partner at every fund, who, by the way, only you and another 1,000 entrepreneurs want to go pitch him today, right? And if you don't have that intro and you're just knocking on the front door, maybe it can work. I haven't seen it work, right? Everyone's been connected in Silicon Valley one way or another that I've seen, right? I worked there for 25 years, right? Before I got one good company venture backed, right? It was not my first try. So, and that's a lot of going up and down Sand Hill Road with a PowerPoint. You know what I'm saying? That is just a tough nut to crack. That's the biggest difference, is you can equity crowdfund if no one knows who you are, right? It's a meritocracy. It's not who knows you, right? And the other one is, the allocation of time. I say they're similar in that if you're equity crowdfunding, you're going to be working at it pretty hard, right? But the outcome's not binary with equity crowdfunding, right? So you can go up and down Sand Hill Road and you either get a venture round or you don't, right? But for your Reg CF, it might be either you get $1 million or $500,000.
You still getting
right? Yeah, you're more likely to get what you put into it, and not a 0 or a 1.
There's a range of outcomes, and you can make decisions based on which outcomes that you get. Just to circle back to one other thing that I brought up, which is, what sort of questions did you get from VCs, and how did they differ from questions you got from crowdfunders?
Okay, so VCs, beside the obvious, oh, how do you know Bill or whoever made the introduction, right? Uh, what have you done before, right? A lot of checking out who you are and if you fit their model.
Mm-hmm.
You know what I'm saying? With equity crowdfunding, it's like, well, tell me more about the business. How does this work? How does that work? Who can you sell this to, right? They just seem to be more pragmatic questions, to be honest. I think the VCs, they already have an idea of what they're looking for. They think maybe you got something that matches that. And you come in and they got, two others just like you. They're trying to figure out which one in the space to get behind.
Yeah. And something else you said, what I like about equity crowdfunding too is you get to keep the ownership of your company, right, to an extent. But you also get to involve those investors in the decisions, right? They get to give you feedback. They get to tell you these different things like, hey, try this. I think this would be cool, right? Whereas you don't necessarily get that from the VC side, right? Because a lot of times you get that VC money and it's kind of like, okay, gave you money, now go make me some more. And you're just off to the races with your team and build it even further. But whereas in equity crowdfunding, you get the masses, right? You mentioned having the masses. And I think that's what equity crowdfunding is about. That's how we're going to make equity crowdfunding go mainstream. The masses need to understand that they have access to this and that they can actually invest in these companies and be able to have a say and have like give feedback to their investment, right? Instead of just walking away from it. If I invest in a public company, right? If I invest in Apple or if I invest in Uber, I have no say in anything. I can't even give my feedback. Yeah, I can send a little feedback form that goes to the cloud or wherever they send it to. In this instance, you could be raising through an equity crowdfunding platform where your investors can come in and they can leave comments and they can see your updates and then you can give feedback. You can actually engage with them and they can engage with you. And I think that's really cool when it comes to how we're engaging with the masses and how we're engaging with this new world of investors, right? And I think it makes investing a little bit more fun. Because you get to move the pieces around more. So really good, really good stuff. So I'm kind of curious though, why equity crowdfunding for Cloudastructure? What made you do that? How was the experience with raising before you decided to do equity crowdfunding? And then why did you decide to do equity crowdfunding as your next form of raising capital?
Sure. Well, like I mentioned, last company I started was backed by SoftBank. That was our lead investor and probably the most notorious, notable one, right? We also had Cardinal Ventures and W.I. Harper in there. And, we did a series of rounds like most startups do, in Silicon Valley, right? And after a merger and a name change, it was the company's now called Jakarta. It was Uber's first investment after their IPO. They bought the company, right? For 8 figures, right? They never officially announced how much, but it was a good chunk of change. And I made a tiny fraction of that. Like I was able to buy a stand-up arcade machine and turn an old van into the mystery machine out of it, right? Like that's it, right? They had liquidation preferences. They had all kinds of stuff built into those deals where, if you made the next Facebook, you're going to do pretty well. And if you don't, they're going to eat all the deal, right? And they ate all the deal. And that's just their job. That's how they do it, right? And so with equity crowdfunding, you're absolutely right. It's better for both the entrepreneur and the investors, I believe. You could try and posse up and invest in with the VC. VCs are not a lot of fun and not that rational to have around on your board, right? They're typically don't have operational experience. They have VC experience. Right. They used to have operational experience. That all changed. All the original VCs had started tech companies and became investors and were paying it forward. And they hired a bunch of MBAs to help them out, and then the MBAs took over. When you're working with VCs, they're going to give you 12 to 18 months of capital, and that's it, right? And if you don't have this hockey stick growth, if you have any sort of hiccup, and the path to success is always variable, right? They're coming back in for another bite and another bite, and each new VC is washing out the previous VC, right? And with crowdfunding, I've seen much more linear and stable price valuations. I don't see the new investors wiping out the old investors, right? So, the early investors typically do better than later investors, right? That's how it should be. Higher risk, higher reward. But I don't see the new ones trying to like wipe everyone out, because the companies don't set it up that way, because they don't have to, because they don't have VCs involved, right?
You said something interesting there that caught my eye, Rick, which is, uh, I mean, and I'm combining two concepts. Is you said earlier, talking about equity crowdfunding, how the traditional belief is that you do better with consumer goods, where the customers become your investors and the investors become your customers, and you get this virtual cycle going. But you're operating in a different space, with different customers, more of a B2B stuff. Yet you found success there. So A, why do you think you found success there? And B, what do you say to B2B founders, and that sort of stuff, that, or even to VCs that say, hey, equity crowdfunding doesn't make sense in a B2B standpoint. It's more like a direct to consumer sort of thing where it makes more sense.
Yeah, I can see the double bottom line advantage of getting a motivated investor base to be your future customers. That's the whole Kickstarter kind of model, right? But I've also seen it just really go sideways. We've all seen the Coolest Cooler or whatever that was, that raised a ton of money and couldn't ship a styrofoam box with Bluetooth in it, right? So the retail investor, the individual investor, if they've got hundreds or thousands of dollars to put into early stage startups, right? If they have a rational investment portfolio, that's a small amount of their investment capital, right? 5 to 10%. They're putting the rest in stocks and bonds and real estate and other things that they have, right? But if they've got that much put around, they've had a pretty successful career, right? They've got some stuff going on in their lives. They got some insight and some intelligence. They're able to figure out what it is that that can make something successful. They probably have a job that has an office that needs cameras, right? And they can go to the IT guy and go, tell me how our current camera system works, and tell me about this company I just saw online, and see if you like this better, right? They're smart, rational people, and in mass, it's like a democracy. They vote, and their vote is right? They voted for what made the most sense for them. That's what raised the money.
You talked about how with the VC, right? They're kind of steering the ship in a sense, because they have this large amount of ownership in your company, depending on what you settle on. And I think, like, in a lot of times, right, they create this runway for you that if there's a hiccup, like, it could all go bad. You might not get your next round. What I like about equity crowdfunding is that there's second chances, whereas that you may not have in the VC world, to get it right, because you have all of these people who have invested, right? All of these people who have also different perspectives, different investment portfolios as well. And one person may say, hey, no, do it this way or do it that way. But if you mess up, you get a second chance, because there's still that huge fraction of people who understand what you're trying to do. And they understand that there are certain things that you have to fix along the way. And there's certain parts that they like. And that's the part that I feel like we get more out of it. I feel like you can help businesses grow faster by getting more feedback, right? Instead of having an investor that's just totally hands off, just run to it. There's so many things and people who are smart out here, who have ideas and who have a perspective on one thing or another, that can say, hey, go do it like this, try this, guys. And you're like, you know what? Boom, we're in a round table with our investors and say, you know what, this is actually smart. Let's figure out how to implement that, right? And now you have the opportunity to grow even faster, because you're getting the feedback from the crowd, from the masses, right? I'm curious, like, what do you think, right? What do you think this type of investment looks like in online investing in the next 10 years? What does that look like for just the growth of startups, right? And what does it look like just for the growth of revenue into the industry?
The next 10 years, we've already seen in the last 10 years since the Jobs Act, the ability for individuals to participate in early stage companies. That used to be, presumably with all good intentions, it was made the domain of the rich, right? If you live next door to Mark Zuckerberg when he was starting Facebook, and he's like, oh, Lorel, man, I need $5,000 for my new company. I'll give you 5%, right? I just need a little capital to get over the hump. You'd be like, yeah, I believe in you, Mark. Here's your $5,000. And he would go to his lawyers, and they would go, oh yeah, unless Lorel's an accredited investor, you can't take his money.
Exactly.
You're like, well, what's an accredited investor? Oh, he needs to have like $1 million in net worth. He needs this and that, blah blah blah. And they're all, sorry, Laurel, I can't take your 5K, right? You would have missed out on the investment opportunity of a lifetime, right? That was done allegedly with all good intentions. That you can't have shysters around robbing widows of their retirement savings and stuff, right? So that makes sense too. But at some point, it's a free country. If you want to invest in a smaller company, you should be able to, right? And so I think those regulations right now, where you can invest up to some small percentage of your income and stuff, will get loosened up more. I think we'll see the caps raised. Reg CF used to be a 1 million cap and then went to 5 million. I think a Reg A was originally 20 million and went to 50 million. Reg A Plus went from 20 million to 50 million, right? So I think we'll see those caps continue to increase. I think we'll see the restrictions reduced so that individual investors can get in sooner and put more of their money to it. When times are good, it's pretty easy to find some good early stage investments and get some good returns, right? Rising tide rises all boats, right? I think there's also be periods of time where that class of investment will be difficult and things won't work so well either, right? But if you're good at picking the right companies, I think the retail investor is going to have more opportunity to participate more in the space if they choose to.
Do you think that this is what this and the regulations and the different changes, right? The Reg A and CF, the amount to raise has gone up. Do you think that is the catalyst to really make it go mainstream, to where like instead of I can only invest 5% of my income as myself, that going up? Do you think people being able to put more into it from their income into equity crowdfunding will help it go further mainstream? Because we also know that, right, there's a lot of our American people, including our like minority communities as well, they may not have a huge amount of money that they have coming in their income. They're barely making ends meet as we see it now, and that 5% is very small to them, right? It's really not. They're not able to put into too many companies. They might be able to put $3,000 in a year. Do you think the raising of that regulation will help it go further mainstream?
Yeah, I think the more people and dollars that can participate, the more platforms and avenues will become available for people, right? If you got a $30 transaction fee on a platform, it doesn't make any sense to invest $30, right? Half of it's going to the transaction fee, right? But those fees come down with volume, right? There'll be another platform. Hey, I'll do it for 15. I'll do it for 5. I'll do it for 1, right? It's like when you first open an online brokerage account, it used to be $19 a trade. That was, oh man, that's so cheap. And now every trade is free, right? Online. So just more participation reduces friction.
How much of this is a generational change? Is that in that the younger you go down, the younger you go generationally, the more interested in and the more excited they are about investing in startups, and the more aware they're about investing in startups.
Yeah, I think it's both the startups, but also, this is fundamentally an online investment, right? Mm-hmm. You're not pulling out the newspaper, looking at IBM, right, seeing the stock price, what it was, 52-week high, 52-week low, calling your broker, hey George, I want to put in, another $500 in IBM, right? It's completely different now. Just like kids nowadays, getting all their food on Uber Eats or Postmates or whatever, right? And just everything has just completely changed, right? It's just a very, very different world. People are on their phones, using apps for stuff, or whether it's a web app and it's still on a browser. But people are doing stuff nowadays. Even just my dad, one generation past, would be like, "Yeah, I'm not messing with that."
Yeah, and and the level of sophistication is remarkable when you think about where I was in my 20s, or late teens to where they are now and coming up. Their approach to all of this is so much more sophisticated and advanced than I ever could have dreamed of, or maybe I was just stupid. Both are entirely possibilities, but I do think it's remarkable just how much more aware they are of startup investment principles and wanting to be part of that ecosystem.
Yeah, when we were growing up, the big companies, the companies you knew, right? IBM, Lockheed, General Dynamics,
Yeah.
GE,
Mm-hmm.
right? And those were the big companies you admired. And nowadays, it's the ones that came out of nowhere, right? I mean, kids nowadays grew up watching Google, Facebook, Uber, Airbnb go from nothing to something really fast,
Yeah,
right?
and
And they've seen that. There's the TV show Silicon Valley, right? That's already in reruns. That didn't exist when we were kids, right? There's no glorifying the high risk, high reward entrepreneur. That was just the crazy guy.
you get crazy guy,
So we
and
talk
velocity. Just watching TikTok go from nothing to massive in the course of their
Yeah.
short lives is just unbelievable.
Yeah.
New money used to be a slur, right? Oh, that's just these new money people, right? They can't, they haven't had money for a long time like us important people,
Yeah.
right? And now it's idolized.
Yeah. What generation are we referring to when you guys say us as kids?
Well, I don't know how old Ben is. I'm 54.
All right.
I am an old man in entrepreneurship.
To me, anything younger than Gen X is young.
I think it's crazy. Like for me, like I'm in my 30s, so like I think it's crazy. Like just my generation, how much technology has shifted from like I remember my parents having the bag phone, like
Hmm.
like the mobile phone. I'm like to now we have like just like fancy
Well,
stuff. You know what I mean? So it's
Well, yeah, well, Rick is of an age that'll appreciate this. Laurel, you're a little young for this, but I remember being in boardrooms and being in meeting rooms trying to convince people that the internet wasn't a fad. And no, this was real. You had to,
For sure.
people told you the internet's going away. It's a fad. No one wants to shop online. No one wants to book their air tickets online. What are you talking about? Get out of my room. Get out of my office. Leave me alone.
Yep.
And I was a young kid talking to them, and they just didn't believe it. So when you think about the velocity of change and the way things have changed, it's tremendous. Just even in the course of the last 30 years. And then when you think about the way capital raising is changing and the way people are thinking about investing, and Rick's proof of this with more than a few successful crowdfunding raises under his belt. The way companies are formed, the way companies raise capital are changing dramatically, and it's exciting to see what's going to happen in the future.
I know we're coming up on some time, guys. I want to make sure that there's a couple things that I want to make sure we cover as well, right? So we talked about the disconnects in equity crowdfunding, what should happen next, how to make it go mainstream. I'm curious to know, now that you guys are doing equity crowdfunding, what do you attribute the success that you had so far in raising through and having a campaign? What do you attribute your success to so far?
Yeah, that's a great question. So we got some newsletter coverage, which was really big for us, right? If you get picked up by the right entity, that's kind of there's not a lot of newsletters out there that have a lot of reach, but there's some that have a lot of reach, and they're doing some vetting out there for the retail investor, much like KingsCrowd is, right? Coming in and doing a little diligence on the companies and looking under the hood and checking them out, and before they make the recommendation. And that made a big difference for us, right? Being on a platform that was stable, had a good interface, told the story. The founder video. Everyone with a platform would tell you the founder video is the thing that people watch. Kids nowadays, we talk about how different things are. People aren't reading a 12-page PowerPoint anymore, right? They want to see the 1 or 2 minute video from the founder. It's a different medium. I remember talking to a woman that I've known for a long time, and she was selling a robotic device, and they were ramping out and scaling it, and she's like, man, people just don't read the instructions. It's so crazy. I'm like, yeah, people don't read the instructions.
Watch them.
So make a video.
Yeah.
She's like, oh, right. And
Yeah.
so she made a video, then people watched the video, right? And then she was good.
Yeah.
So, that's just, one example of how things have been different. But, again, a newsletter, having the right platform, founder video that tells the story, right? And a good team with the platform that can help you figure out where to market it. And I think those are the keys right there.
And a good team in general, right? You have an amazing team that we've been working with on the Equity Crowdfunding Conference, because you guys have this really cool exhibit. what excites you the most about being able to exhibit at equity crowdfunding and have people see your product firsthand, and then also you guys are partnering and doing it part of your activation with Boxable on Boxable. So like, tell us a little bit about that. Like, what is exciting you about being able to do this in person?
Yeah, I met Galliano Boxable early in the crowdfunding experience, right? We're both trying to figure it out for the first time, and he's been absolutely great with it, right? He's really had some smashing successes. They're making a lot of these casitas, these pop-up homes, and for us to sell one camera to one home doesn't make a lot of sense, or even 3 or 5 cameras, right? We look for customers that have 300 properties of 30 cameras each, right? That's a good customer for us. But they're making a lot of these casitas, right? These pop-up buildings, and I think that's a great opportunity for us to build them into these when they go into a community. That's a good place for us to play along with. There's a lot we can add there. So we're hoping to show some cool real-time tech at ECW that'll allow people to experience it, right? Oh, look, it's recognizing me, or it's recognizing this object, or whatever.
Yeah.
So we hope to have a chance to show that off there.
Yeah, that's why I'm excited about the conference, because like during COVID, right, a lot of these companies raised a lot of money, right? And these investors, in a sense, are investing in your company without seeing the product, without seeing it actually work, and they're still investing and have raised millions of dollars, right? With equity crowdfunding is now an opportunity for you to actually come see your investment in person, and then on the other flip side, see all the new cool other investments that are actively raising now that you can invest in. And that's why for us it's important for these businesses to be seen. I'm going to wrap up with one last question. I'm going to let you guys do wrap up, and then Vin, if you have any last questions before we roll, what is next for Cloudastructure? And like, what in the next couple of years in your roadmap, what does that look like? And then what would you say to an investor that's interested in investing in you? What would you say to them directly?
Well, what's next for us? So we're still at the early stage of growth, right? And you can trade profitability for growth for only so long, right? So we're getting ready to switch gears. We think we found the reproducible, scalable sales model, the right customer base and all that stuff. So we're really digging into that. And then we have to turn it into a profitable business, right? You can't go public, et cetera, until you do that. You can't stand on your own 2 feet until you do that. You can't stop asking people to back you until you do that, right? So turn the corner to predictable growth and profitability is the very next step. And I say to everyone out there, I think we're a great investment. I think there's others out there that are great too. We would love to have your support. We got a lot of stuff online. We got some more stuff coming out before ECW. And I think there's a lot of really exciting things. I think we'll all agree that the future is going to be AI, computer vision, machine learning, that sort of stuff that we're doing. And how many buildings have cameras, right? It's from when it's on the commercial side, it's like all of them, right? So we got a big market, and we're digging in hard.
From a due diligence standpoint, I would be remiss if I didn't ask you 2 questions. The first is what's the key to turning that corner to profitability for you? What is the hurdle you have to overcome, and what exactly are you doing to do that?
It's a repeatable, scalable sales process. There's an old Chinese proverb about the guy who goes hunting for the first time, and he's standing next to a tree when a rabbit runs up and slams his head into the tree and knocks itself out cold, right? So he has a lucky first shot. So he spends the rest of his hunting career standing next to trees hoping a rabbit runs by, right? And he never catches another one again, right? You got lucky the first time. So you really need that repeatable, scalable sales process, right? And you got to find that before you scale that stuff up, right?
Okay, and so that's what you feel like you found is the secret sauce in the repeatable, scalable sales process. So that's the first due diligence. The second due diligence question is, it's actually a lot more fun, but you built Scooby-Doo's mystery machine? you got to share this story, because you dropped it in earlier in the pod, and I was like, no, we got to get back to this Scooby-Doo mystery machine here. So, what's the story here?
So it wasn't, in my defense, it wasn't my idea. I was in my early 20s. I was at Fry's Electronics in Sunnyvale, and some guy had an old Dodge Carpenter van that he had painted to be the mystery machine. I'm like, oh, that is so cool. I would love to do that, but man, I can't afford the van. I can't afford paint. Like there's no way I can pull this off right now, right? I fast forward like 20 years, I'm driving down the freeway. I had a BMW M6 convertible at the time, right? Like it was a really nice car. I go, oh man, that Mystery Machine, I just, for whatever reason, popped my, that's so cool. Too bad I can't afford, oh, wait a minute, I can sell this piece of shit and I can get like 10 Mystery Machines, right? So that's pretty much what I did. I sold that BMW in a matter of weeks. I found an old Dodge Ram van, and I made the Mystery Machine. You can still see that at ScoobyMobile.com. I had more fun with that car than I've had some nice cars, right? I had more fun with that car than the nicest car I've ever had. Everywhere you went, people came up to you. I would just take their phone, I put them in the driver's seat, have them lean out the window with the double thumbs up, and take the picture for them. It was the most fun I've ever had with a car.
Man, I love it.
Cool. Well, listen, guys, this has been great. I really appreciate it. Rick, if there's any last words, please let us know. Looking forward to having you at Equity Crowdfunding Week. Looking forward to being able to meet you, meet your team. If you have not gotten your ticket to Equity Crowdfunding Week, don't miss the opportunity to see really unique investment opportunities for you to create generational wealth, be able to invest in something before it even goes public. Like, you have that opportunity and you get to see them firsthand and how they're doing it. You get to hear from them. The conference we've set up has an amazing storyline that we put together in the way that those tracks run. So check it out. And then, yeah, guys, thank you so much for your time. Thank you for your insight. And yeah, thank you for being here.